Hello and welcome everyone to this week's COT review. I'm Thomas from COTBase.com. Today we're going to be looking at the 9th Commitments of Traders Report of 2021, and as we always do, we shall start off by looking at the largest changes in commercials positions. But before I start the review, a reminder for anybody who is new to COT analysis that here at COTBase.com we offer a lot of helpful educational material, not only in written format but also in video format too. Okay, back to the review and starting off with our first market, the Japanese yen, where you can see we have a 31% change in commercials positions, and that is visible on the chart over there. There's no question if you compare that to this 52 weeks time horizon, 1 year, that it is pretty large, and it is a bullish COT change signal coming after decline in the market. And you don't need to go back that much to find a similar picture where we had a greater than average change size pointing in the same direction just preceding this rally that we had over there. So that shows you the effect of these sudden changes. Now, of course, not always. It's something you should keep in mind, but definitely it says, traders know something. They shifted their positions accordingly, and based on historical analysis, we can conclude that this is a short-term bullish COT change signal. Now, if we move on to the 5 years chart, you can see that we were in a bearish extreme zone for quite some time. Just at that top, we reached an extreme from where traders started shifting the direction, commercials decreasing their net shorts while large speculators decreasing their net longs. One might ask, is this a bullish extreme already? Well, it's been almost a year since traders were at that level. If you look at this 5 years chart, we can see much greater extremes to the opposite. So, it's we can compare it to the past 1 year. It's definitely more bullish, but looking even further back in time, I would say, it could easily go to even greater extreme levels before we reach a bottom in the Japanese yen. The last major extreme signal was this bearish one that's been building up for quite some time, but eventually it hit the market, and we're experiencing a decline in this market. Moving on to silver, this is going to be our next market for the review. Of course, jumping to the 1 year chart, we can have a look at that 26% change that is present in commercials positions, much greater than average. There's no question about that. Again, it is a bullish COT change signal coming after some weakness in this market. And moving on to the 5 years chart, you can see that we're not at those significant bearish extremes, nor are we at a strong bullish one, more or less in between, meaning, the report in itself allows the market to further rally, or if you want to argue the other case, then there's no, signal suggesting we cannot go further down in prices. And I would expect that to be the case for gold, which is our next market, with a 24% change in commercials positions. You can see that change size over there being once again larger than average, coming after a decline. And moving on to the 5 years chart, you can see that we are more or less in between the two major extremes. So the most bullish extreme from October of 2018, and then we had that bearish extreme in February of 2020. We've moved away from those levels, and you can see the market has actually gone higher. We are getting close to that price level, to be honest, just before that drop happened. Okay, moving on to large speculator COT Extreme, we've got the British pound on top of our list with 148 report extreme. So what does that mean? We've got the green line over here representing large speculators, and it means that for the past 148 reports, roughly 3 years, we were not at such a level. It's a very large bearish extreme, I should say. And if you look back in time, what happened then, that was actually the top in the British pound then. So very, very similar case. We could see further weakness in the British pound. That's what this is saying. Of course, I always advise anybody who trades currencies, especially pairs, to always analyze both sides of it. Of course, we are talking about the British pound measured in US dollars, so you might want to look at the dollar index as well. The next market, another currency, in this case the New Zealand dollar, where we have 147 report extreme, very, very similar to the British pound. You can see that was roughly over here, again, a bearish extreme that pushed the market lower. And you can see if you go back, you can easily go even further back in time. Don't forget, here at COT Base, we show you the entire COT history of every market. So that's something really great to know. So you can see that currencies are actually pretty good markets for COT extreme signals. So they're very accurate there. But you have to be careful though, because these extreme signals could build up for many, many weeks or even month before the market reacts. So I mean, if we go down 1 year, you can see there has been a bit of a decline in the New Zealand dollar. Is this the top? It's hard to tell. But this is a stress measuring tool. So all it does is when traders build up positions to extreme levels, you can start have that feel that something's going to change. And last but not least, let's go over to lean hogs, where we have a 91 report extreme in the market in large speculators positions. You can see that on the chart. And again, we're talking about a bearish COT extreme, and you don't have to go back that much, just until 2019, roughly 2 years, when we had a somewhat similar size extreme in the market that halted that rally. That was very, very dynamic and pushed the market back to a much lower price range. So that's what the report is suggesting in the medium to long term. That's what we should expect from lean hogs prices. And that was all for this review. Of course, don't forget these weekly reviews that I do are very brief, show you only a few markets. But if you want to analyze more, you can do it here at COT Base. You can look at the newest COT report types like the disaggregated, the TIF, the CIT. We also offer the option of choosing, what kind of data type you want. You're only interested in the futures data. You would like to combine it with options data, or simply you want to look at options data, which is, I think, very, very great to have. CFTC actually publishes the data in futures only and futures and options data format, but at COT Base we constructed the options only, which of course is a quite simple mathematical equation, but there you go. You just have to click on it and see it. You can analyze a lot of data sets. You can of course look at all the market categories that are available. And you can, of course, dig deeper into your analysis by looking at multiple report changes compared to any look back period that you want. You can chart it if you wish. You can look at the COT index, the COT move index. You can have the long-term trend indicator turned on. We also added the volume and open interest analysis, which I think is very, very useful and a very great supplemental tool to COT analysis. And if you are someone who trades in a shorter time frame, we actually constructed the ICOT intraday indicator. You can read a lot about it here, and if you want, watch a webinar that we did back in October of 2020. Very, very useful tools here that we offer. I think anybody who's interested in a shorter term trading would find value in this indicator. So that was all for this review. I appreciate your attention. Thank you very much for being with me. I wish you a great weekend, and I hope to see you next time. Take care. Goodbye.